What do you make of the action that we're seeing in the pre-market here in the U.S.? We're seeing the major indices down right around 1%. Surprised we aren't seeing a bigger reaction.
That's exactly what I was going to say. That I would have expected more. And I think that given what we're seeing, the potential rise in oil prices certainly complicates the desire for this administration to bring in lower prices. Inflation is already a problem. Margins within the S&P 500 are under a lot of pressure. And one of the things that oil brings in is it creates a problem with that it will take away from demand. And so if consumer demand is hit and earnings growth is also under pressure at the same time, that's not a great combination. And I would also kind of underscore that the concern around inflation isn't just around oil, which tends to to hit margins and also demand, but also supply chain. Let's not forget that a significant number of goods run through the Middle East in terms of supply chain routes. And so this could add to an already complicated scenario that we're looking at for anybody who is looking to supply materials for manufacturing and other services, and other
Right, Gina,
other services.
Really a great point. We saw some disruptions in the Red Sea last year for a while, and there was a lot of inflationary concerns about that. Patrick, I want to come over to you. So one thing that we've seen, it's been a bit of a trend, is that when we see these geopolitical events, we see, panic in the market, or at least a sharp reaction in the market, and then people seem to get over it relatively quickly. Even today, the oil market seems emblematic of that. We saw oil prices up double digits. Now they're down to about 7%. When you're going to be talking to some investors and clients today, how are you going to suggest they react to some of these developments that we've seen and respond when it comes to their positioning and decisions in the markets?
I'm actually thinking you should be looking through this. I think as we get forward, Iran's in a very difficult situation that it can't respond proportionately. It doesn't have control its own airspace. Israel does. It's responded with drones already. Ballistic missiles may follow, but they'll have limited effect. And Iran would really be shooting itself in the foot if it actively disrupts supply chains through the Strait of Hormuz, because it's getting its oil out to China through that strait. So I don't think this is something that is likely going to turn into a real economic shock. You have a natural response on gold and oil jumping today, obviously. But I do think, as we see Iran's limited response potential, we're probably going to get back into a status quo, an uneasy feeling where the Middle East is going to have these tensions. But I don't think this is the trigger of something that really disrupts oil supply.
All right, Gina, do you agree? And also, it seemed like the trade situation was calming down. Now these geopolitical tensions are ticking up. Are there any sectors right now, at least in the U.S. markets, that you see as relatively safe to invest in? Are there areas of the markets that you just stay away from because of some of the questions, first and foremost, about how long these attacks from Israel will last? We just heard from Benjamin Netanyahu saying this is going to take as long as it takes, basically.
Yes, I do agree with the idea that the markets are clearly looking through this. As I said right at the outset, I was surprised that we didn't see a bigger reaction. And if you look at how the markets tend to react to these kinds of situations, there are very few situations that actually kind of result in significant price impact for a very long time. In fact, it tends to be a very short-lived experience in the markets, and I think the markets are certainly setting themselves up. And the things that tend to complicate that would be a rising rate environment, and we don't have that. That was the one thing that did kind of impact, during the Ukraine, during the invasion of Ukraine. That's not in place right now. So I think that the markets are actually setting up for something that doesn't become kind of a continued conflagration. Now, obviously, that could change at any point, but I think that that's what we're seeing in the markets.
So, Patrick, I'm going to give you the last word. You're saying the market seems to be looking past this event. It sounds like you are as well. So is today an opportunity? And if so, what areas are the opportunities in?
I think naturally you want to look for safe havens, and within equity exposure, you've got a lot of risk already. So gold, oil, that's where people will be looking. But I actually think structural spending on defense companies is a very nice tailwind. You actually see the benefits on days like this as well. So European defense is something where you're going to see structural revenue growth as Europe rearms. It's got a less reliable U.S. partner in NATO potentially.
But Patrick,
ongoing
and I hate to interrupt,
and nationalism.
But I have to say it in all fairness, right now we're looking at the ITA ETF. It's up about 1.5%. So you're saying buy what everybody else is buying? Because if we're just looking past this, wouldn't you want to buy in some sector that's taken a decline today with the thought that the market's going to look past this and that sector is going to recover, or that area of the market's going to recover?
You could if you're looking for a very short-term trade, but I'm talking about over the next few years. Okay. You're getting this geopolitical hedge with incredible tailwinds behind it. So we're not looking at extreme market movements today with futures down 1%. You can be buying the dip there, but that's a really small incremental gain. I do think you should be positioned for things over the long term that have structural tailwinds, non-cyclical earnings. Don't look for treasuries as a safe haven. That's a tarnished asset. If you do want treasury protections, inflation-protected bonds are a much better safe haven.